Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, what's coming up on the show today?
Jim, today we're going to talk about why I think Trump's tariff strategy is doomed to fail, why Vista Gold Corp is incredibly undervalued at $3,000 plus gold, and I'm going to talk about a bottom fish called Opus One Gold Corp, for which I've just written a write-up, and I've also run a couple of AI-generated analyses. I'm going to try and make a case that the stuff I write is much more interesting and insightful than what these AI generator systems can produce.
So why do you think Trump's tariff strategy will fail?
The way these tariffs are supposed to work is when a country has a trade deficit with regard to a certain good relative to how much it produces of that good versus what it imports from other places. There's usually a reason for that, which is that the other place, assuming that they don't have different tariffs in place that create an unfair balance, the so-called reciprocity. Let's say they should have a 2.5% tariff on each one. That balances out. But usually a country has an advantage because it is able to produce the good cheaper than it is possible to do so to the company to which it is exporting the goods. And during the last 3 decades, the United States, led by its giant corporations, pretty much took advantage of globalization to shift productive capacity into jurisdictions which had much lower labor costs, very weak health and safety standards, and very little enforcement of emission standards, assuming that such emission standards even existed. So the cost of production in jurisdictions elsewhere in the world ended up being lower than they are in the United States. And that's capitalism at work. And that created the whole sort of resentment about people in the United States losing their manufacturing jobs, ending up supporting a populist like Donald Trump. And his solution is to artificially raise the price of all imported goods to a level where it is well above what it would cost to produce that same good in the United States. And to some degree, it makes sense to want to reshore productive capacity, because when you're dependent on a place elsewhere that turns out to be geopolitically hostile towards your interests, then you've got a problem. For example, right now, China has $1 trillion trade surplus against the rest of the world, and a good chunk of that is with the United States. And if a conflict breaks out between the China-Russia alliance and the United States and trade ceases, the United States will have a physical goods deficit. But the problem with this approach is time and capex. So right now we have these extraordinary tariffs lodged against all these countries around the world, even a tiny little country like Lesotho, which where Levi's manufactures jeans that get exported to the United States. It's basically almost like a make-work a program for this little country to make it a sustainable country. Trump has slapped huge tariffs on that to basically force Levi's to move jean production back to the United States. Now, what are all these corporations going to do? One problem they have is they source their parts from many different places. So in essence, to avoid having to really increase the costs of everything by simply continuing to import and pass it on, they have to make a decision. Do we tool up to make these things in the United States? But how long will that take? And how durable are these tariffs? Is there going to be a midterm election that changes the balance of power in the United States and all these tariffs get eliminated? There's also the fact that Trump uses all his bluster as a negotiating tactic, bullying everybody with some extreme threat and then walking it back to try and work out some sort of deal. But what he has done here is basically declare America against everybody else in the world. And he's doing it from the standpoint of this is the biggest economy in the world. He thinks everybody has treated the United States unfairly. But are corporations going to act? So I think we're going to see a paralysis kick in, and we will see prices go higher, get pushed onto the consumer, who's not going to be happy that this is happening, and we will not see domestic production happen within the next few years, replacing what is currently imported. Simply because it takes time to adapt, and there is uncertainty that it's going to be worthwhile. Because if suddenly free trade's in operation again 3-4 years from now, then all that investment is a complete write-off. And this reminded me a lot of the predicament of the mining sector. Now, the mining sector has to deal with global metal prices. And for Western corporations, their mandate is to produce a profit for their shareholders. So that creates a distinct disadvantage for them. When they build a mine, permit and develop a mine, that takes many years. They have to predict what the metal price is going to be. But in the world we have, it has become skewed. For example, Russia and China, and this is very similar to what happens in the manufacture of other goods, they have a natural endowment in terms of grade and abundance for a lot of deposits, but they also have very weak environmental standards, and therefore they can produce everything cheaper than, say, somebody in the United States or Canada can produce, where there are much different standards. Plus, you have to have a profit margin to show for it. So this creates a lot of uncertainty about when do we push the button to make a construction decision and start to invest the money. Now there's a couple ways to deal with this. One is to join the race to the bottom. For example, the United States could kill all environmental standards, slash the minimum wage, and just operate on the same basis as say China and Russia do. However, that doesn't change the natural advantage in terms of the endowment of the metals, the copper deposits, zinc deposits, lead deposits, whatever, in these other countries. There is an alternative approach which was attempted or started to be underway in 2021, and that is to use information technology to start to document the chain of custody of all your inputs. And this was the ESG movement, where you end up classifying goods as, these are goods made responsibly in a sustainable manner. You can't force people to pay the higher price that these cost, but if you can clearly distinguish dirty products from clean products, you give the consumer the choice. And those who have more income available, discretionary income, they can choose to buy the clean stuff, while the poorer people, they're going to buy the dirty stuff because they have to subsist, but they don't really have this option. That was the market-driven alternative. The current administration is pretty much not interested in anything ESG. It is interested in the race to the bottom. But even there, the United States will have a problem competing, because a communist nation like China, in terms of raw material production, it can operate at break even or even at a loss and make the price so cheap globally that any country where the corporations need to make a profit, they cannot get anything started. And China has done this with rare earths. It has a natural endowment of rare earth deposits. It produces them very cheaply, doesn't make money on it, but it now controls the downstream magnet sector, which is much more valuable than the cost of the rare earth inputs, and that's where they recover their loss or make their profit. And the United States can't really compete in that arena, because everybody is supposed to make a profit producing goods in the United States. As far as like non-resource materials, manufacturing other goods, I think when they do bite the bullet and say we need to retool and start making all this stuff here in the United States, it will be done with an unprecedented degree of automation, and And this will not create the jobs people think they will. Yes, it'll bring manufacturing back to the United States, but it will be controlled by corporations with minimal employment pools. And then that raises the question, well, if all these people continue to be out of a meaningful job, where are they going to get the means from to consume these goods and services that these corporations are producing with the help of AI and automation? Because AI bots and that, they don't need to consume anything. So where does the profit come from for these corporations that justifies the very existence? This is a deep problem that nobody's really thinking about long term. What are all these people supposed to do in order to be in a position to consume goods and services that enable these corporations, these magnificent knee benders, to be profitable? That question is unanswered. With regard to the mining sector, I think the rest of the world is going to circle the wagon and sort of say, okay, United States, you want to be the way it is. It's going to hurt us in the interim, but we will continue to trade with each other without these types of tariff obstacles. And yes, it's going to hurt, but we have to adapt, because the bullying that you're doing is not sustainable in the long run. And the United States is doing a huge favor to China, which has relied on its export economy and its real estate development bubble to sustain itself while neglecting the development of a domestic consumer economy. Just as several years ago, they dealt with the semiconductor chip export bans to pour an enormous amount of money so that Huawei now has a giant industrial park where the Chinese are now perhaps even outdoing the Americans in terms of technology development. Necessity is the mother of invention. When China cannot export to the United States anymore, the biggest economy in the world, then you are going to see China start paying attention to its own citizens and changing things so that they're not so freaked out about their retirement security, their health care and all that. This will make China stronger as the United States tries to hurt it in the interim. While the United States, I'm not sure how making everything more expensive for everybody without really creating new manufacturing capacity is going to make America stronger in the long run.
What does the current gold price do for the potential value of Vista Gold Corp?
Well, during the past week, gold made another record high, $3,130 or so. It's off today on Friday because we now have a second day of major declines in the general equity markets. People are starting to understand the blowback that's coming. The magnificent knee benders. It's starting to come out that while the United States has a significant goods trade deficit against Europe, it has had a consistently almost identical trade surplus in services. And who provides all these services? Well, it's the Amazons, the Metas, the Googles, all these technology platforms, and they've been sort of petitioning, bending the knee to Donald Trump, saying, Europeans are enforcing these privacy laws, and now that Trump has basically declared war on everybody, these platforms have a significant problem, because when you're exporting a physical good, once you've sent it to the other country, it's there, that's it. All you can do is make more and send more to future customers. But in this service type economy, the Amazons of the world, they are present. They stay present. They own the information. They keep building it. So the type of service they're providing, it is this ongoing surveillance of all their customers. So it's a stickiness. And I think we're going to see a major pushback against these social media and technology platforms in Europe as they seek to shift the usage of these services to domestic platforms. And we're already seeing this with the realization that the United States is going to throw Ukraine under the bus, hand it over to Russia, give Russia a green light to invade the Baltic states, maybe Poland and all that. The Europeans have woken up. They're starting to develop their own military plans, and they are looking at the wisdom of continuing to rely on America's military exports and saying we need to develop our own stuff. We've got now a situation in the United States where there's a war on science. All these government agencies that are involved in supporting science are being dismantled. That's obviously coming from the religious part of America, which is very anti-science, the kind of people who would prefer intelligent design to be taught in school rather than physics or anything like that. So now you're going to see a brain drain as smart people leave the United States to go to other jurisdictions to put their talents to work where it is actually supported. So this is going to, I think, really impact these Magnificent Seven, and they are going to continue to decline. Now, what's gold going to do? Well, the market still seems to think that gold is going back below $2,000. Vista Gold Corp, which is one of my favorites, it trades on the NYSE Amex part of that exchange. It's trading around 72 cents US today. But based on their plan to produce 400,000 ounces annually from their Mount Todd project in the Northern Territory of Australia, at the current price, the after-tax net present value per share is $24 US on a 10% discount rate and $37 US on a 5% rate. And in terms of absolute numbers, that's a range of a valuation of $3.1 billion to $4.8 billion. And you can maybe knock that back 25%. You're still dealing with a future stock price that's 10 to 20 times higher the current level. And it just isn't happening. The market doesn't believe that this will happen. But you have to think, as America encloses into itself, walls itself off from the rest of the world, and the rest of the world carries on and continues to trade the goods and services, their costs are going to remain with an equilibrium that they are now. So developing Mount Todd in Australia at $1 billion capex will probably stay $1 billion capex. If this project was in the United States, such as, say, Perpetua Gold Stibnite project, you can expect another 30% increase in the capex costs of any future mine development in the United States. And of course, with the United States pulling into itself and the rest of the world learning how to do without trading with the United States, the use of the U.S. dollar as a reserve currency diminishes, and there's no obvious replacement. So gold continues to be that bridge away from America. It's going to be that traditional asset class, safe haven asset class that is fungible. Forget Bitcoin. That's something for the Americans to buy and sell amongst themselves. It's simply a wealth transfer mechanism. The Silicon Valley bros have cheap Bitcoin that they can unload to the MAGA-land people out there who think this is a good way to enrich themselves. That's all circular Ponzi scheme that will eventually collapse. Gold is not a Ponzi scheme. It is a physical substance. It costs a lot of energy to make more of it, and it becomes this trading bridge for a world weaning itself on dependency on the United States economy to sustain their own economy. So this is going to happen, and this, one of the simplest ways to just hedge against everything going dark and small in the United States is to buy a stock like Vista Gold, because when the inflection happens, this stock will go from 70 cents to $1.50 to $2 to $3 almost in a heartbeat. And once people see that happening, when they see that gold's not going back to $2,000, that is going to stay at elevated prices for a long time, that's when the bull market kicks in. Right now, it's trading as if this mine is nowhere near being in the money, and yet the feasibility study was updated in 2024. It's ready to go when the capital arrives to make this happen. So Vista Gold Corp is probably the best way to hedge against the failure of Trump's tariff strategy, in that it makes the United States a less important player on the global scene while the rest of the world adapts to a new reality with America with a diminished role.
Why do you think your bottom fish description of Opus One Gold Corp is superior to what AI services like GROK and ChatGTP generate?
Well, I have 108 juniors, resource juniors, in my 2025 bottom fish collection, and I've started doing a detailed write-ups explaining my thinking as to why these are interesting bottom fish, what the missing piece is that's needed to ignite market interest and have the stock go up 5-10 times or more when everything starts to happen. Now we're still sitting in a bear market. While the gold producers have gone up, even the ounce and the ground type companies such as Vista Gold, they've only gone up modestly, nowhere reflecting the fundamentals that are implicit in the ounces they have in the ground and what it takes to mine them. And as far as exploration juniors, there is still very, very little interest. The value traded is still going sideways. So ignition has not yet happened. Now, of the 108, I picked Opus One Gold Corp because it's unusual in that after 3 years of doing nothing with its Noël project in Quebec, it bit the bullet and did a 5-cent financing at the end of last year that raised about $1.5 million to allow it to initiate a drill program on the Zone 1 portion of the Noël project, which they last drilled in 2021. And this project has a history of exploration starting in the late 80s. It's in the Douay-Cameron Deformation Zone, which runs parallel to the Casa Berardi Deformation Zone, which caught the market's attention during the 80s when Golden Knight discovered the Casa Berardi deposit, and then another one of the another one of the Narampo companies of Bruce McDonald discovered the Estrades VMS deposit, polymetallic with a decent gold kicker a little bit farther to the east. So there was a lot of exploration, and you had companies like Cominco looking for base metal deposits within this trend and drilling a series of holes. That all fizzled in the early 90s. In this case, SOQUEM got involved, which is the Quebec government agency, and it started drilling several holes between 94 and 97, which showed, what Cominco had intersected. Yes, gold is present, and of course, SOQUEM's job isn't to build mines in Quebec, it's to sort of demonstrate that something's interesting going on here. And this project ended up in the hands of another junior, which optioned it to a junior as a property of merit going public, and they started following up the old SOQUEM holes in 2006-07 and demonstrated, the zone is getting better. Close to surface, it looked like a bust, and so they did not bother drilling any shallow holes in this area, and then this company wandered off to do something else. The property reverted to the owner, and the geologist, Pierre O'Dowd, who had worked on it back then, was pretty frustrated because this was all starting to come together. These high-grade shoots were evolving at depth, and when he ended up working for Opus One Gold in 2019, he just recommended they auction this property from the owner, and they had a fairly simple deal: buy it for $500,000 in payments, cash or stock, stretched over five years. But of course, the market turned pretty bearish. They started drilling in 2020, got 2 holes done, and then COVID forced everybody to shut down everything. They resumed in 2021 and drilled more holes and demonstrated, yes, the grade does improve at depth. But since 2021, we've been in a pretty bad bear market, and they've treaded sideways. They managed to pay the final $200,000 payment last May, and they now have title 100% to this project. Meanwhile, gold has gone from hanging around below $2,000 in late 2023 to over $3,000, and that helped them raise money in December for this program. So, that was my understanding of it, and I looked closely enough to realize, well, this is unusual. They had about 10 holes planned for this upper part, and they had another 10 holes planned for the lower, deeper part. So I did what the AI agents can't really do. I talked to the management. I talked to Pierre O'Dowd. What is the purpose of this? Went through the presentation. So probably spent several hours getting my head around the story, and then wrote it up in a way where there's a summary in front which sort of briefly explains what's going on, and then walked into the different graphics and explained, okay, here's what has to happen. And one of the interesting clues that I picked up was for the 10 holes that they had done a graphic showing where they're supposed to be, I learned that they had actually drilled all of them, which means that, you're not, if the first few right smack in the middle where you're supposed to demonstrate whether or not there is something or not, you don't go drill the rest of them. And even more interestingly, they drilled 2 or 3 more outside that grid. So obviously the shallow portion of this system, where there'd been a couple of holes by Cominco and Soquem that bracketed this, and so I said, these were dusters, not very good. Well, sometimes in these type of orogenic gold systems, there are blank spots, and you just get unlucky and you drill a blank spot. Sometimes you get lucky and drill the good part. Well, if they drilled 12, 13 holes on this up to 150 meter vertical depth area, visually they probably saw something. Now, whether there's gold in it, we can't tell, other than the fact that deeper down there is gold. The gold in this system is associated with the sulfides, so when you see sulfides, you start getting excited, but you need to get the assays to really know. And apparently they've also finished drilling the deeper holes. Again, they have not put out any press releases about the visuals or anything like that, but they did expand the total program, and they're now trying to raise another $2 million at 5 cents for hard units with a half warrant. And they're also trying to do some flow through at 6.5 cents to pay for the expanded part of the program and to have additional money to continue. And again, the problem there is this is a very boggy area. It costs 3-4 times as much to drill in the summer because it would have to be helicopter supported. So they're potentially entering a dead zone between July and the start of next year when drilling is cheap again. However, if we're in a big bull market and if the results they deliver are good, you could end up seeing money suddenly raining from the sky into juniors that have a live emerging discovery. So as I kind of figured all this out, I realized, okay, even though this is an obscure bottom fish with 200 million issued and maybe 260 million fully diluted if this financing closes, it is liquid, it's cheap, it's 5 to 7 cents. It doesn't look like insiders own much. However, this is a company that has a solid shareholder base of business people, private investors, Quebec people. They understand the story. They're not going to buy any stock until they get confirmation that this is indeed evolving as a gold story. I ran the numbers, and the footprint they're drilling, based on what we know so far, it has maybe a potential for 200 to 400,000 ounces more if the grade is better, and of course. There is now potential for repetition. And here's the interesting thing. They did a biogeochemical survey last year, beginning in January. Pierre O'Dowd, an assistant, strapped on snowshoes, marched out into the snow. His assistant was something like a machete, chopped through all this black spruce that had grown up. The whole area had been clear-cut logged 20 years ago, but everything had grown back. And they clipped the lower branches of these trees, put them in their sample bags, let them dry until the needles fell off, and then shipped the branches to an assay lab, which does a multi-element analysis. And Pierre wasn't particularly optimistic, but Louis Morin, the CEO, said, let's do this because soil sampling in this area doesn't work. 20 meters overburden, bog everywhere, no outcrop. We need to find out where within this 10-kilometer trend there are other zones like Zone 21 so that, we can multiply these 400,000 ounce potential zones along the strike. And when they did this within this 3 to 2 kilometer grid, he was quite surprised to see a distinct anomaly on top of Zone 21 where they already knew there was gold. And this was, I think, helped encourage them to drill the shallower part, because the deep stuff that they've drilled, that's not going to be sticking out of the ground and shedding gold into the basal till where the roots from the trees are absorbing the gold and arsenic and everything else that comes with these types of deposits. So that helped them focus. And if the results are good and show that, yeah, at surface there is gold there, they have a continuation of this anomaly to the east, and they drilled one hole about 1 kilometer to the east that was a dud, but they're seeing there might be something still there, and there are no other holes there. And even more interesting, about 300 meters to the south, there's an offset trend that's also about 1 kilometer long, which could be a blind target. So they're going to maybe go in there in the summer to do a biogeochemical survey in the summer if, the market still isn't embracing anything, expand it to the western part of the property, because in that area where between the western boundary and Zone 21, where Cominco drilled all these holes, they were looking for VMS. So although they got gold here and there, they didn't care. They wanted to see copper and zinc in these targets. They were drilling EM conductors, and the EM conductors are all caused by graphite and the fault that hosts this mineralization. So they basically drilled a bunch of dud holes, and SOQUEM added some more holes, and Pierre thinks that if we do this survey over this area, we could see perhaps where there are other chutes that come to surface where we can start drilling down the road. So this whole property, with a new level of data that wasn't available before, is turning on a new light. We still need confirmation, and but just from the body language and behavior of the company, I will be very surprised if there isn't at least something interesting in those shallower holes that says, wow, we have something closer to surface that really boosts the chance of this eventually being developed. Now, when it was put into GROK and ChatGTP, I was quite impressed. They obviously scraped the website, read all the news releases, maybe even know how to read the PowerPoint presentation, and came up with a fairly cogent description of everything about the company. But it reads in a way that's really boring, and I'm going to, in my Substack, post both of them along with my actual the bottom fish write-up, and I'm going to leave it to the audience to judge which captures more nuance and potential and makes you think, geez, this could be a very interesting bottom fish. Maybe I'll wait till it's 10 cents where it will be if there is validation. But given the low valuation, there's lots and lots of upside potential. So AI is helpful in assembling a whole bunch of basic information, but it doesn't really capture the story in the way that somebody like myself endeavors to do, and has to put in hours of going over this stuff and talking to management and putting the story in a way so that it excites me, and not in this boring manner that the AI agents generate.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.